New York time, approximately London lunch. It's time for our daily Forex trading strategy session. It's April 20th, 2016. I actually don't know what day it is in your land. Today is, it's a Wednesday. Oil inventory day. So that's cool. Well, let me go through the routine, and then I'll let you know where we stand. So let's what should we do? Let's do this. I'm shaking my arms, giving myself energy. I'm so tired. Hey, thank you, Kenny. Motion creates emotion, right? So anyways, welcome to Forex.Today. You look good. How you? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. We execute your trades quickly, affordably, without any drama. That's exactly what you want from your trading partners. We want to be your prime broker. That's why we use events. We're trying to make you successful and earn your loyalty. That's it. So we do these sessions 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street. Forex Speaker of the Year. Good to see you. So, full disclaimer here, I just walked off an airplane, no joke, walked into into the office about 4 minutes ago. And it takes that much time to boot up the software and boot up Windows and stuff. So no joke, I'm still in my stinky, sweaty clothes. I've been traveling for 29 hours straight. My feet are worn out, my butt's worn out. But hey, it was a hell of a 40-hour day. So here I am. So I don't know what's going on in the world. I've been disconnected since I don't even know when. So it's been a while since our last meeting. I met with you on Monday, and I've been traveling since, and now it's Wednesday. And it's 7 o'clock in the morning, and I'm ready for a steak dinner because I feel like it's nighttime. So there we are. So I'm going to go through the process of figuring out what's been going on technically. I haven't even had a chance to review anything fundamental. I don't know what's happened in the last 36 hours news-wise, so I'm disconnected. But I thought what we could do is at least go through the process of looking at some technicals, and I'll realign my satellites, and maybe you can help me. Maybe it's an exercise of you help me get caught up, and it's your opportunity to shine, perhaps. So we'll do something. How about that? But at least I want you to know I don't quit on you, right? So I give you 110% at all times, even though I should probably just shower and go to sleep. I don't want to let you down. But a sane person would shower and go to bed, right? So anyways, I'm insane in the membrane. Insane in the brain. So let's get going. Let's do some Forex. So we're looking at Pig Dog here, and the first thing I notice, even though this is a 1 minute chart, maybe change this to a 1 hour chart, but it seems like we've hit our target for the week already. Isn't that interesting? Oh, thank you, Ryan. So the Kuwaiti strike's over. Cool. That's neat. All right. I wonder how Kuwait ends a strike. Yeah, so that'd be bad, right? So Ryan mentions that, and then I glance over at my CAD chart, and the CAD has actually been strong for the last several hours. So that's interesting. You'd think it'd be the other way around. But anyways, I'm looking at Pig Dog here, and I see that we're at the target for the week. So this red zone tells people if you're a bull, this is an area where you should consider taking profit, and that if price goes up higher than this red zone, it's unlikely and therefore riskier. Okay, and the interesting thing is this first area where we're topping out. It's not just a red zone, but it's the M4, right? Now, if you were using pivot point theory, what does the pivot point theory suggest the bottom of the week is? Or to put it a different way, if you were a bull, what was the buying opportunity based on pivot point theory that would lead to an M4 target? Yeah, it's M2, isn't it? And isn't it striking that this is the weekly M2? And if you bought there, and you can see someone bought there immediately, right? You see the huge bullish engulfing candle, even though the first one was quite bearish. And anyone buying it there is going to want to take profit at the first part of this red area, which is the M4. And so you could say that that is textbook pivot point trading, isn't it? So this is an opportunity, even though it maybe has nothing to do with trading methodology, but you should, as far as trader psychology, you should look at these things and coach yourself and say, see, professional traders are using weekly pivot points. Even though it won't put you into a trade, it builds confidence that that your analysis has a high probability of working in most cases, right? So I look at that and say, M2, boom, to M4, wow. Now also, how about a double top? A double top after that move, I think is very, very interesting. And so even though everything here says bullish, I'm just wondering if it wants to come down. Okay? Some dollar strength today, maybe? So I look at the dollar index, I don't see anything bullish. So maybe it's pound weakness. All right, so you see where I've gone? We need to figure out what would produce a downward move here, because it looks like it's trying to double top. So if it double tops, is it pound weakness or dollar strength? Okay? So you can put that there. Well, let's pay attention, right? Okay, so let's look at the beast and see if we see anything different. Remember the question on the table, pound weakness or dollar strength on the way? Well, what do you know about this? This week's bottom seems to be a monthly pivot in play, right? What does monthly S2 predict? Well, first of all, the R2 and the S2 are the most important, or let's say primary, reversal pivots, okay? And then you throw in a double bottom at this area. Very interesting. Okay? And now where is it going to go? Well, depends on how long you want to hold it, right, and take that risk. So let's move out here. Let's identify the obvious levels of resistance, right? Start with the obvious easy stuff. And then add the layers of complexity that, I don't know, somehow make you confident. All right, where is it going to go? Well, if I want it to go higher, I'm going to want it to come down and then slingshot, right? How do you go higher on a trampoline? You jump up, right? So you fall so you can jump up higher on the second move, right? Think of it as a trampoline. Boom, boom. All right? Boom, boom. Just because you're falling doesn't mean you're not going to bounce back up. And in a situation like this, yeah, you're going to gain momentum. I kind of think of it as slingshotting around the moon. Okay? That's how I've always thought of it. So, um, I'm too tired to get into the analogy, so let's just keep going. Let me mark this level of, it's almost the same level, but I'm going to mark this here too, which is fine. So why don't we do it like this, this, and then this. I'm thinking about this. Let me think. You're pressuring me. Back off. Give me some space. Bye. See, hitting the weekly or monthly S2, the one thing that it makes me think of is the trend is still very bearish. I mean, we hit the extreme bearish target, right? Yeah, Ryan, nothing's going to come out of that though. They're gonna hold off. But anyways, yeah, I'm thinking that because we hit aggressive, I'm not gonna play the reversal. So homie gonna take it back, right? Homie gonna take it back. Why don't we do it like one step closer to the edge, and I'm about to break. Okay. How does that feel? Not quite up to 160, or do you want to reverse at 160? Yeah, I know the 160, but I'm thinking if it's still bearish, do we want to just not even test that? Because for example, let's measure this distance here, right? If we go all the way back to the monthly central, that's going to be a 786. And that's too much weakness, right? Right, so I'm thinking FX thing that's too far, right? So I'm thinking more 618, and that's why I changed it here, taking off of this level of support. Okay, you okay with that? Okay, this is an area for it to form a reversal, and I do want to see. Remember, we've been talking about second quarter. The British pound should surprise everybody with good UK data, but it's right. We don't quite have it yet, right? Well, maybe, Ryan. Right? I'm not saying you're right, and I'm not saying you're wrong. If that's what you're thinking, but you'd put that together and be ready. Okay. So, Great British Pound, yeah. Um, if you look at it from a, uh, I'm going back to the pound dollar now. When I look at the pound dollar, it is trying to break to the upside. So I don't know. We'll see. We'll see. We'll see. We'll see. So let's look at something else. A risk-on scenario, right? How about Aussie yen? Yeah, it's just too bad we had such a big move here, isn't it? Because we already had it set up for easier trades. But notice how we just come down this support, area. All we did was come back down, tickle 80, and now we're up 550 pips, right? So it's one of these things, and I tell you over and over and over again, but maybe you've forgotten. Um, you make your decision on what you want to do, and you stick with it. And even if this means you're taking small losses on the way down, not big losses, small losses, um, you stick with your guns and you say, for whatever reason, you believe this will go up. If not today, then someday soon. And then, and these are daily candles. Then eventually you get your opportunity where you see a bottom, no lower low, no lower low, bullish engulfing candle, right? Dip, 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 drop, and then back up. And now it seems we're moving here. If you're a bull, you're trying to play the 5 EMA, right? Right? That's that's what I call a mean reversion. So what we're trying to guess to sometime today between now and let's say the Asian session, what we're trying to do is guess where tomorrow's 5 EMA is, okay? And we want to buy there. And that's yesterday you would have been doing something similar. Even though we were way up here, okay? Let's mark this. I think this will work. Okay, I'm going to mark this and then drop into a smaller time frame. Back out, and that should still be there. Yeah, okay. So when we were here yesterday, one of the things you need to try to do is guess where tomorrow's 5 EMA is going to be. And it ended up being about here, right? And how can you guess this? This is probably the Asian session, right? Maybe London Open. How do you guess that? How do you find a reasonable area to buy in the direction of the trend where the daily 5 EMA is going to be tomorrow? Yes, you can use the EMAs. Another trick, though, is just to measure the day's range. Okay? And where's the sweet spot? Where's the face of your driver? 382 to 618. Thank you, Artem. Okay? Somewhere in there is the most ideal place to buy, assuming you're trying to trend trade. Okay. And so what I'm thinking is this has a pretty reasonable chance to go higher. Okay. So on this, what it says, if it comes down, it'll come down for 2 hours. So let's play this out on a 15-minute chart then. Let's do it like this. Okay, it comes down, then New York opens, makes a higher high. Okay, just something like this. 618 predicts 1382. So we get up here, we tickle 86, and then what? Revert back to tomorrow's 5 EMA, which hasn't been created yet. So we would make this whole area that I just drew, today's range. You see what I'm doing? It's a lot of educated guesswork, isn't it? Down for 2 hours, up for 3 hours, and then what? Oops. Now we have to set up tomorrow's trade. What? Wayne? You can't set up tomorrow's trade now. Why not? Okay. So tomorrow's trade now would be to buy somewhere between the 382. Let's just do it this way. 382 and 618. You say, well, we're there now. Well, yeah. I'd be a little careful. But what I'm thinking is likely to happen today is, like I said, we come up here, it comes back down. Okay, and wouldn't it be cool, like an hour before the London Open, or maybe it's at Shanghai Open? I was just in Shanghai. Pretty cool, man. I went on the maglev, a magnetic levitation bullet train, 430 kilometers an hour. Say what? Has anyone been on the maglev in Shanghai? Yeah, 430 is pretty fast. You know, like normal bullet trains are 300 kilometers, guys. Kenny, yeah, Kenny, you've done it, right? You know which one I'm talking about? To the Long Yang Road. I sent my wife a text. I'm like, hey, I'm on Long Yang Road. You'd like it, baby? Long Yang. It means something funny in, in English. I'm like, oh man, Long Yang. So, anyways, Kenny knows. It's not a fancy train though. So this is what I think. I think you might see this on an hourly chart. Oh, my mouse is busting up here on me. Oh, come on, mouse. All right, got it back. So this is like an hourly play. Now draw it out on a 15-minute chart, right? I said like this. This is fractal geometry, guys, right? Then this, right? And then how's this gonna play out? I'm too tired to get it beyond that. Oh no, I'm running out of steam. Sorry. So, anyways, you'll figure it out. It's only fractal geometry. Sorry. Okay. Ooh, yeah. I got to get caught up on S&P. Looks like it's been rocking it, huh? Long Yang Road. All right. So I think we had conversations in here. This is where we had to buy it, and it went up. And then I was a little worried about being topish, but it looks like we've had a little mini breakout. Let me zoom in a bit. That much, yeah. Cool. Boy, that's really nice. And it even pulled back to the 21. That's really cool. I guess earnings have been good enough. I wouldn't expect good. How about this for a scary? I went from Shanghai to LA, and there must have been, I don't know, let's say 17 empty business class pods, and coach was probably half empty. That's pretty scary as an economist, isn't it? As a practical economist. Yeah, you don't see that very often, like at all, right? And then you arrive in the United States, right? LA to Atlanta, packed, 100% full. Yeah. That can't be good, right? So is that because Americans are not flying to China to do business, or the Chinese are not, I don't know. It's just like that can't be good. And then booking hotels and stuff in Dubai was like 30 cents on the dollar compared to just a few years ago, right? The Ritz Carlton in Dubai 3 years ago, let's say, was I think about $700 a night for a simple room. And that same room this year was like 230, like not even 250, like 230. From 700 to, 230. Same room. So like, wow, really? So business is bad, you know what I mean? Oil prices down, people in the region, not much to celebrate, not much to talk about. Mark. Well, Mark, I don't know if I'm a bear, but that was disappointing, right? When I roam the streets, I keep my eyes open for things like that, and I usually talk to people that are like service people in the industry. I ask them, "How's business going? How were things 2 years ago? How were things 5 years ago? That kind of thing." So I'm always gathering intelligence. So, anyways, this is a stock market, and it's acting pretty good. So I'll have to look at some of the earnings. I'm a little out of touch, but I like the price action, right? Breakout, pullback, breakout, pullback. Okay, it's good, and it's getting topish. And you see the MR1 monthly resistance. Maybe we're on our way up here, but that's going to be an all-time high, right? Are we ready for that? We're very overbought going into the all-time high. And look at it, it's weekly M4. Oh, vey, weekly M4 is the all-time high? Or sorry, monthly M4 is the all-time high? Here's what I predict. We break out and then we collapse. Yeah. It's not going to be today though. But let's say we spike up here and lots of dumb money buy it, and it's going to come down hard. My guess is the market pumps and dumps that. Right? What do you think? Hedge funds will unload profit taking up there around the M4, but they don't want to unload at the M4. They want to do the breakout, and CNBC goes, "Oh my gosh, like all-time high, all-time high," and then boom, hedge funds just unload everything. So, like, Mark, is that bearish? He says, the bearish side of the game. I think people are in this market for the money, right? They're in it to make money. That's probably a really nice place to take profit. But what else would you do with your money if you're a money manager? What else are you going to do with your money, right? Trade silver. Yeah, so I'm just thinking out loud. I mean, the U.S. stock market, at least the companies are making money. I don't know what the earnings are, but I'm sure they're making money. And compared to the rest of the world, the U.S. economy is doing quite well. So long-term investors will stay in, hedge funds will get out, then get back in, right? Wow, I'm looking at the TV. Is that Donald Trump's daughter, or did Monica Lewinsky dye her hair blonde? Can't quite tell. Well, I'm going to be buying some corporate bonds. I'm going to buy some Ford. I think we already talked about this, though, didn't we? I was teaching my nephew about bonds. I'm like, so pick an American company that you think will be around 50 years from now. It's big names, right? I'm like, Coca-Cola, or what else do you think? And he says, Ford. I'm like, oh, Ford. Yeah, that's good. So I look up Ford, and it's like almost 10%. Oh, holy crap. Yeah, it's like 9.3/8 or something, whatever. Like, holy crap. Yeah, so anyway, so I might be buying some of those. Think of it, on a 5-year bond, you get 50% of your money. 50% return on your money. Yeah. So I'm not a bond trader. See, if you trade bonds like a trader in and out, right? That will lose, its price will lose money. The reason for it is interest rates will go up in the next 5 years, right? In the United States, right? What are the odds over the course of the next 5 years interest rates go up in the United States? We're just talking interest rates, not yield, just interest rate. 100%. Thank you. Absolutely, totally 100%. So let's say you bought a bond right now. You paid a price for it, right? $10,000. Great. But when interest rates go up, then what'll happen is your bond will be worth less. The actual price will be worth less because new bonds will be priced higher as far as yield, and no one will want yours. Okay, but you'll still get your interest rate payments. Okay, but you'll lose in price, and that's what creates the yield, right? Because yield is a function of price. But the way I look at it is, if you're not going to resell it, then it doesn't matter what price is, right? Does that make sense? Right? You don't care about the price because you loaned Ford Motor Company $10,000. You're going to hold it till the end of the 5 years. You'll earn $5,000 in interest payments over the course of the 5 years, and you'll get your $10,000 back. Done, right? But if you wanted to sell it, let's say now you're not investing, or in this case, you're loaning forward money, which I like to think of it like a bank, right? I'll loan you money, you'll pay me interest. Okay? But if if you were buying and selling bonds back and forth and trading it, well, it's going to lose value, and its price would be falling as the Fed raises interest rates. And the higher the Fed raises interest rates, the more you would lose money on price. But if you're truly an investor now, then you just hold to the end, and it doesn't truly matter. I mean, there's some opportunity cost. Now, obviously, there's going to be some risk priced in, and for some reason, the market thinks Ford is risky. So, do your research. But I'm interested anyways. So yeah, stock market looks fine. It looks pretty bullish, but I think the closer we get to the double top, the more I'm going to be a little worried, right? I don't think it's just going to break and go, go, go. I'm looking around the world. I know we're looking at this chart and talking bonds, and the charts don't reflect bonds, but just go, and then I'm going to wrap up because I'm really tired. But I'm going to just look at my charts in front of me. You only see one screen, and I have 17 other screens that I'm using. And I just want to go look around and tell you what I see. Okay? And maybe it leads to some sort of value. Okay? I look at the daily pound yen, and it's at the daily 21. I think that's interesting. The 4-hour has made a higher high and has pulled back to do the higher low. So you need to decide, if you're a bear, you should really pay attention to the pound yen right where it is, because it on its 4-hour, it needs to cycle down before it goes up if you're a bull. Because if you're a bull, you're thinking, oh, it's going to dip, and I'm going to buy the dip. But the dip could turn into a reversal, right? And why would the dip turn into a reversal? Because on the daily, we're at the 21. It doesn't look bearish at the moment, but it could be. And if you are a bear, pay attention is all I'm saying. Now, conversely, let's contrast that with something. The euro yen. The euro yen also daily 21. So if it starts to fail on like the 4-hour and the hour to make higher highs, you might have a pound yen, euro yen short position. I'm not saying it's there now. I'm just saying depending on how the day turns out over the next few hours, it could be building that up. You wouldn't want to buy where we are now because it's already too late, right? So what about a potential sell? And so it depends on how the next few hours are. But if the pound yen falls and the euro yen falls, what's the likelihood all yens fall? You see? So then what I do is I'll very quickly glance at the commodity currencies. The daily Aussie yen, daily Kiwi yen, daily CAD yen look completely different than pound yen, euro yen. But the 4-hour look very much the same. Okay. So very interesting. There is a difference going on. Now with oil inventories later today, you should pay attention to the commodity currencies. They're more overbought, much more overbought on the daily chart than the European pairs, if you want to contrast European pairs with commodity pairs. Am I making sense? I just don't really I'm too slow to pull up all these charts. Oops, I didn't even mean to do that. Yeah, I'm very slow today. Sorry. So I'm looking at the 4 hour. I'm wondering if things are building up for a rollover. And maybe it has to do with commodities coming down. And if the commodities come down, they drag everyone with it. Maybe it's yen strength coming in. So now I got to look at the USD yen and the daily US. So in the vicinity of the 21 as resistance. But we broke through the cycle level. Remember how I like the cycle levels on the USD yen? And that's not really working. So yeah, I think we're going to need New York to open. Dollar right now looks weak. So where does that put us? If the dollar's weak, pound dollar's going to go up, euro dollar's going to go up. That would favor the 4 hour pound yen, euro yen charts. But like I said, if you wanted to buy those, you should already be in them. Like you wouldn't be doing it now. Why would you be doing it now? You're so late, right? But it looks like maybe a continuation for them. But I still would keep my eyes on the daily 21, especially euro yen. Euro yen's like right on it. So very interesting. You'll find it'll be an all right New York session. Is there news today? See, like I said, I walked in 4 minutes before the webinar from the airport, so I don't even know what. And honestly, I wasn't even sure if it was Wednesday or not. So I don't know if we have news on the calendar. Canadian wholesale, maybe. Existing home sales. Okay, I don't think that'll be important. Department of Energy, yeah, but that's old data, really, right? In the sense that, you know, the geopolitics of energy right now in the Middle East is more important. And we're not going to get new information from them until closer to June. Andrew says UK employment as expected. All right. Earnings a bit lower. Okay, all of that would be on trend, right? Keith says staying on the right side of the 21 is really helping your trade. Yeah, absolutely. That's why the 21 to me is probably the most important EMA that I use, right? Keith, is there a particular time frame where you felt that it's helped the most? Like hourly or 4 hour or daily? Daily, yeah. Okay. And how about things like daily Stokes or 4 hour Stokes? Are you guys getting better at following those things? Because a lot of these setups, not just this setup, all right, I got to give you some eye candy, and then I got to shut it down because I'm babbling on. Do you remember I set up an Aussie yen trade? I don't know, last month or something, where the daily setup, the 4 hour setup, the hourly setup. So and I said this was going to be worth 700 pips, and I got kicked out early for like 300 or something. I had to hedge it and stuff. It was really complicated. Let's try to look at it on this one. Okay, do you see how this move set up on the daily? And the one I just spoke about was this setup on the daily, right? And this, I got knocked out in this sideways action and this sort of divergence, and then it popped after I took off my profit, right? And I was in it way down here, so I only made 300. I think what I did is I made 200 pips because it went up and then came down. I think I made 200 pips, but I hedged twice for 50 pips profit, so I still made my 300. And then it went way up here without me. Boo. But notice how it moved again, right? And look at here, how it moved. And so maybe one thing to throw in there, that when it is oversold and you are a bull, that you should at least say to yourself that there's a reasonable possibility that sometime soon, if not today, maybe the next day or the next day, this thing bounces at support. So this one, dropped like a ton of bricks, right? 187 down to 181, or not, sorry, 87 to 81. And all of a sudden, held, and this would have crossed and then start working its way up and all that kind of stuff. I look at that, and then I look at CAD yen. It did the same. I look at the Kiwi yen. It did the same. Aussie yen. That's what you see there, right? And then when I look at like Euro yen, it just started that process. So it's the laggard for obvious reasons, right? So so Keith says staying on the right side of the 21, and which I love, of course. I think everything else is sort of wrapping it, right? I use the 2155 to discern market forces, right? And then we use the 5/8 for price action, and then we use the the stochastics for overbought, oversold, right? Well, if I'm looking at a 4-hour or a daily, I don't really trade them, right? So I don't really need things like 5/8. You know what I mean? I don't need them because I'm going to drop into smaller time frames to pull the trigger, right? So what am I really looking at? On the 4-hour, I'm looking at where we are on the near the 21 and the angle and separation between the 2155, so I can kind of get a speed of the market. So is it speeding up? Is it slowing down, for example? And then like the daily, I'm looking at the mean reversion idea. Where's price relative to the 5, but also what direction is the oscillator going or going to be going, right? And those are things I do pretty quickly. And then the smaller time frames like your 1 hour and your 15, and I think this is where amateurs mess things up. They look at the hour, they look at the 15, and they trade the price action, but they have no concept of trend and they have no concept of fundamentals, right? So their trades are shorter term and they work for a while and then they give their profits back because they're not paying attention to mean reversions on the daily. Right? And they get knocked out and they give some back instead of expecting the pullback. And then they chase the dip because on the 15-minute it looks like a reversal. Well, it's a dip on a 4-hour. Boom, someone else buys it. So anyways, I feel like I'm babbling on, so I must be way too tired. So thank you for putting up with me while I've been traveling. It's good to be home. I stink. My hair is greasy. My face is greasy. Time to take a nice warm bath. You know what I'm talking about? So yeah. So again, thank you for your patience over the last week or so. You rock. So peace on earth. Excuse me, and I'm losing my voice, right? Peace on earth. May the pips be with you. May your profit average. Watch the oil inventories at 10:30 today. Watch that kitty cat. What do you think oil inventories are going to be like? Well, now you have to start paying attention to things like rig count. Okay, so demand isn't going up. We have lots of supply, but maybe we're not producing as much as we used to. And then that starts changing the equation, right? And also don't forget, June 1st is peak oil. And the next OPEC meeting is June 2nd. So maybe oil comes down to June 1st. And then between June and December starts rising. So maybe one more dip down to, I don't know, 30, 35. I don't know where we are now. What if we came back down to 30? How about that? And then we go from 30 to 60. And it's not just supply, like I'm saying, but it's the fact that we took several, let's say we took producers out of the market. Fracking oil is expensive. Tar sand oil, expensive, like out of Canada or Venezuela. So maybe that oil comes out of supply, even though we have lots in storage in strategic petroleum, reserves, but maybe taking people out of the supply chain pushes prices up, and then we bring them back to the supply chain and bring it all back down. Maybe. I think Iran would be small compared to, taking all the frackers and the tars, let's say unconventional oil out of play. I mean, right now the real interesting thing with oil is the non-conventional stuff. Because think of it, just 5 years ago, um, the United States was importing oil at huge levels. And any oil that was produced in the United States was essentially illegal. You couldn't sell it. And now the United States exports oil. We have enough oil for, I don't know, another 50, 60 years without the need of the Middle East. So I think that's really interesting. It's just at these prices, it can't be produced. So that's okay. But I'm going to leave you with one thought. In 50 years, the Middle East is going to be called the Far West. Now, why would I say that? Well, my train of thought here is the United States won't be importing nearly as much energy from the Middle East. The United States will have lots of its own oil. And there's always Canada nearby, right? Right? So those closer to home resources will be used in North America. And the oil that now flows west to the United States is going to flow east to India and China. And that's why, so let's put China in the center of the map here. China will be sucking Middle Eastern oil, right? But to them, it's west, not east. So they call it the Far West. Way west out to Saudi Arabia. Okay? So we need to reposition the map from the United States being the center of the universe to China being the center of the universe, right? And the mindset, I think, is all I'm suggesting, is that the oil is going to change direction. The boats, the actual boats, are going to go the other way. Yeah, I think it's a very interesting concept. Yeah, very, very interesting concept where, and this is why OPEC is even struggling to redefine itself. I think they're going to have their own politics to deal with. I think a lot of things are changing, and it all came from entrepreneurialism and capitalism. So, anyways, babbling on again. Sorry. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Hopefully, I'll be coherent. Cheers.